Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor and reporter Megan Grebner. With us is University of Missouri livestock analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
You know what? We had so many weeks of a negative start to our show this week, and for the third week in a row, we're going to talk about another pretty positive week on the livestock market.
Certainly pretty positive relative to where we've been for a long time. That's true, Megan. You know, if you look at, for example, choice beef cutout this week, it's the biggest weekly jump that we've seen since May 20th. So some good news in terms of the beef market. Rib prices up $21 relative to a week ago. So we're seeing some of the seasonal move as well that we expect to see as we get in the latter part of this year. Feeder cattle prices 3 to 7 higher early in the week. We may have moderated a little as we got in the latter part of this week, but all in all, another good week in cattle markets. Hog prices relatively flat, but again, relative to where we've been in a downtrend, maybe some better news yet again for livestock markets.
And we'll definitely take a week flat opposed to another week in the red, I'm assuming.
That's absolutely correct at this point in time.
Scott, let's talk a little bit about the fact that we've seen these prices come up a little bit. So we've seen some positive move. We've seen some upward ticks in the market. How do we protect ourselves long term to make sure we don't squander any gains that we've made?
Yeah, so I think it's really important. You know, we often all of a sudden we'll have the sentiment of, well, markets are moving higher. I should not be protecting risk, and I think that's a bad strategy when, you know, I look at pork markets in particular, and I think if you look at the last week, we again hit a record in terms of pork production. So we haven't lost this notion that we have record meat supplies or near record meat supplies coming, and those are going to continue to moderate what happens in terms of the amount of price strength that we can get. So our expectation should not be that cattle prices or hog prices can get back to where they were, let's say, in 2014. So that idea of protecting that risk, I think, is much more important because I think these markets will move in both directions as we look ahead. There are opportunities for prices to move up to a certain extent, but there is still some downside risk, and I shouldn't say some. There's probably a large amount of downside risk still available, just given that we're going to be moving a very large supply of meat as we look ahead.
I would have to think that the pork industry is definitely facing some serious volatility. We saw another record week for pork slaughter, and there's a lot of pressure still on that market heading into the end of 2016.
Yeah, I'm afraid, Megan, that I'm going to tell you almost every week between now and the end of the year that we're at or perhaps setting another record in terms of pork production. So I don't think that is going to stem anytime soon. And even as you look into 2017, I think, you know, there's this sentiment that, hey, once we get new processing capacity built in the pork industry, life is good. I just remind us that, you know, now it's not the hogs maybe that we're so worried about, but we got to move that pork. It's not like we have less pork out there. We just have more capacity to slaughter hogs as we look ahead, but we're going to have to move a lot of pork, and it's critical that domestic demand for pork remains strong, as well as maybe some export growth as well.
We're going to talk a little bit about some of the reports this week. Let's start first and talk about Purdue's CME Ag Sentiment Index that was released. Overwhelmingly a negative trend in the lowest numbers. It's some of the lowest numbers it's seen since that report began just, 2 years ago?
That's right. You know, they started that back in October of 2015, and I think it's the second lowest overall index that we've seen. You know, one of the things that stuck out to me was 79% of their respondents would have suggested a year from now bad times are going to be in place. Maybe that's the sentiment we need to get things turned around. But as you look ahead, it's hard to find many things that are really bright spots on the demand side. And if we continue to produce record crops and record livestock quantities, I think we know that prices are going to be pressured. And it's a very tough environment. I think when we look for crop producers to get financing for next year, it's going to show another amount of stress. So a lot of worrisome things are on the horizon. I say that all the time, hoping that folks don't get frozen in terms of making decisions on their operation.
I would assume, regardless of the decisions or of the fact that maybe they're feeling it's going to be a negative economy, or we're concerned about pressure on commodity prices or livestock prices, we still have to make decisions, and we still have to figure out how to function to the best of our ability. So how do we take that into consideration to prep ourselves for next year?
Yeah, so I think number one, you have to be flexible. Have to take advantage of the opportunities when they present themselves. I often will say all the time, I see producers who do the same thing year after year after year in terms of when they might market a commodity, when they might sell cattle. Having a little more flexibility in those marketing plans, and being willing to take advantage of higher prices, knowing you may not hit the high. I don't think at this point anyone wants to be the one going into the coffee shop going, I got the high price. Many folks just want to be able to survive as they look ahead. And so understanding where that bottom line is for you, and when is it a good opportunity to move cattle or move any of the other ag commodities that you might have, that marketing is going to get pretty critical. And again, picking market tops. If anybody was really good at that, they would be very rich at this point in time. These markets are very volatile. I'm not certain we're done with the volatility as we look ahead. And so taking advantage of the times where we get some higher prices, I think is going to be really critical as we look over the next couple of years.
And we're going to talk a little bit more about volatility here in a little bit. Let's talk a little bit. Monday, ag prices came out. It's not something we typically talk about, but there's some things to glean from that information as well.
Yeah, so I often like to talk about so prices received for crops versus livestock. We look at that in a number of ways, but I think number one, the thing that's very important for livestock producers is to understand for 38 consecutive months, we've seen the prices received for livestock products exceed the prices received for crop production. That's a very different situation than we've seen for a long time, where those tended to move very much in lockstep. So 38 consecutive months has been quite a run for livestock prices received to be so far above the crop side, but they've narrowed considerably. I think by the time we get another month or two down the road, we can cross over. It just shows you how much more quickly livestock prices have been moving lower, and it's reflected in that prices received index. And you look at those prices received for both crops and livestock relative to prices paid, and it tells you the margin squeeze that we're seeing on a lot of these operations. We've not seen much of a decline in terms of prices paid for commodities used in production. So it really highlights the squeeze that we're beginning to see.
Continuing on that report theme, Restaurant Performance Index came out this week. We also saw the jobs report and the economy all seem to be both fairly well and set maybe folks up for a good feeling. Yeah,
so I think when you look at the jobs report, 166,000 more jobs, unemployment 4.9 or so. It's certainly good news in terms of that report. Restaurant Performance Index up 1.2% relative to a month ago. I remind folks that much of that optimism came in the current portion of that index. When you look ahead, the future expectations, that one drug a little bit, but it's nice to be back above 100, suggesting some growth again in that index after we'd been down the previous month. So pretty good news. And frankly, Megan, that's the news we have to have given the amount of meat we're going to continue to push on domestic markets.
TPP cleared its first big hurdle, not without a little scuffle in Japan. Does that put a little pressure on the U.S. to maybe get that tackled in the lame duck session?
Perhaps, but I think the politics of that in this country are still going to be pretty tough, and we'll have to wait and see whether that's something that does get tackled in lame duck. It's hard to find anybody very interested in talking about TPP in the United States right at the present.
All right, to finish up, we've got two big things coming up next week. Let's start first with the smaller of those two things, which would be the WASDE report. Anything that we need to think about as we look ahead to that report?
think we'll continue to see where USDA suggests prices will be going as we look into 2017 and see what kind of additional drag potentially we have on livestock commodity prices, as well as we have to continue to be worried about where corn and soybean meal go as we look ahead into 2017. So we'll get another glimpse from USDA in terms of what they expect in the year ahead.
Tuesday is election day. As we look at that, what implications can that potentially have for livestock producers, for even our corn and soybean producers, row crop producers? And does it add extra volatility to the marketplace?
Yeah, so I do think we could see some added volatility as we get through Tuesday, and not so much about who we elect at the end of the day as just the process as it unfolds. You know, it won't be the first time that it's taken us a longer period of time to determine maybe who's next in the White House. I think we see a lot of these races getting very close as Tuesday approaches, and you know, I think the longer that we go before we know who won the White House and who won a number of these very important Senate races as well, and see whether or not the Democrats take control of the Senate or Republicans remain in control. All of those things, I think, add some volatility to markets. I would tell folks to be cautious as they look ahead in this week in terms of their market plans, especially if it does take us a period of time before we can declare a winner, and so we'll wait and see. But I do worry a little bit about the volatility that we could see next week.
Scott, good to see you.
Great to see you as well, Megan.
We will talk to you again next Friday. We'll have some answers to WASDE and hopefully have some answers to what happens next Tuesday on Election Day.
Thanks again, Megan.
That's a reminder for everybody to go out and vote as well. As always, if you would like to ask Scott or myself a question, you can do so. Visit our website, brownfieldagnews.com. Go to our weekly livestock market update section. You can also subscribe to have our newsletter delivered to your inbox every Saturday morning to read with your coffee. We'll see you next Friday. I'm Megan Grebner on Brownfield.